So these three are the key important confluences that I look out for in every single trade that I place. And even if one of them doesn't align, I will not place a trade at all. And although there are exceptions, but 99% of the time, I will only stick to these three. So these are my inducements, flow time frame confirmations, and key time windows. So I learned all these stuff from my mentor, Mr. Okarism, and I hope to replicate it to the best of my ability right here with a chart example too. So essentially, what are inducements? So inducements are essentially engineered traps. All right, these are traps where market entices people to enter into the trade. That is, people like us. It'll entice people to enter into the trade and then later take now. These are engineered price action. So all inducements are essentially liquidity sweeps. We know about liquidity sweeps. They're just a grab of liquidity, right? But all inducements are not all liquidity sweeps are not inducements, but all inducements are liquidity sweeps. There's a key difference. Liquidity sweeps can just be, a normal grab of liquidity of equal highs or equal lows, whatever trend line even, but they may not give much reaction, or it'll be like a very slow, healthy, choppy price action. So these are just normal liquidity sweeps without much significance. But whereas inducements show us who is really in control, where the market is going to go, and who is engineering the price and enticing people to enter the trade and then later taking them out in the process. That's literally what happens in with inducements. So I'll explain with an example. So let's say there is equal highs like this right over here. Let's take this as Asia session. Asia is usually a very good liquidity pool or high quality liquidity pool. Asia high and Asia low. Equal highs, equal lows, trend lines, and smart money traps. Smart money traps are really important ones too. So they are also really good liquidity pools. But in this case, let's take Asia high, equal high liquidity pool. Now, what is a liquidity sweep? A sweep of liquidity like this. Price just, there's a lot of orders built up here. Price will just come up and just grab the liquidity right over here. This is a normal liquidity sweep. Now, let's say price action did this and then gives a very choppy reaction like this. Barely anything significant at all. This is a normal liquidity sweep. It's not much significance. There's not much significance at all for this. But the same way, if price action, let's take this as equal highs. If price action now aggressively comes up, sweeps all the liquidity, and then gives a really good aggressive reaction. Now, this is something I'm interested in because for every inducement, there must be a really good first, there must be a really good cause. All right, the cause must be an aggressive grab of liquidity. In this case, equal highs, Asia highs, aggressive grab of liquidity. Now, once we see the cause, what is the effect? So it's the same as the slingshot analogy that my mentor gave me. It's that when you pull back the string, there's more tension built up, and then you release it, there's a huge reaction, right? The ball goes with more speed. It's the same thing here. If we see the cause, a huge cause, that is aggressive sweep of liquidity upward, and then in this case upward, and then if we see a really good reaction, aggressive reaction showing price action wanting to reverse back. Now this is something really interesting, and this is the area where I might look for cells. In this example, I might look for cells. Now, to further refine where inducements happen, there are key time windows. No, these key time windows are the London first hour open and the New York second hour open. Now, these two are the only ones, or only kill time windows, kill time zones, or key time windows, you can call it as. These two are the main ones I trade in, and I don't trade in any other sessions. Only these two sessions I will trade. So in these sessions, these two sessions are the most likely where inducements are most possible to happen. High probability of inducements happening in these two sessions. Other than that, it could be smart money traps. Now, it is not to say that inducements will not happen outside these key time windows. It is possible, but there's more probability that inducements will happen in key time windows than outside of it. That's what I'm trying to say here. So now another example, there are so many variations to this. All right, now let's say same Asia high buildup of liquidity. Okay, now Frankfurt sweeps high. Now, always, this is my rule essentially. Frankfurt is always almost a manipulation. 9 out of 10 times it is a manipulative zone, and you can test it out if you wish. It is back tested too, so it is always a manipulative region. So I don't take any trades in Frankfurt open. So let's say Frankfurt swept this region. Now, smart money traps are enticed in. Now, buyers are also enticed into it because this is a breakout structure upward. So, bullish reaction. A lot of traders think it's a bullish reaction, but smart money traders are looking for sells because Frankfurt did the inducement, or rather a sweep of liquidity. Now, price action gives a reaction and even a confirmation pushing lower. All right. Now, buyers are getting taken out slowly, bit by bit. Now, a lot of smart money traps, or rather smart money is being uh, are placing orders right over here. Okay, because this was a sweep of liquidity upward, and there's a confirmation indicating sell side liquidity. And this is where key time windows play a really important role, because this is Frankfurt, it is most likely manipulative. And once London opens, it'll aggressively shoot up, grab all the smart money trap traders and all the buyers which are enticed. All the liquidity was absorbed in this movement right over here, and other liquidity which might be on the left side. So this happened in our London session. Okay, this is an example. It's not to say that this will happen 100%, but this is an example of what price action can do and how to refine inducements and to see really see which ones are inducements. So this is in our London session. Now London will give us the actual reaction, break or structure. Now as far as lower time frame confirmation goes, there are three things we need to see. Okay, engulfing, imbalance and break of structure. So at the top, we want to see that candle being engulfed aggressively and price action showing intent to push lower. So a lot of fegs or large imbalances, we want to see price action with large imbalances or fegs built around right over here when price was pushing lower. Now after that, I want to see a break of structure. A full break of structure is preferable, but internal break of structure is also valid. So after the full breaker structure, price action will come up. This is where our entry will be. This retracement, 3 to 7 pips stop loss is my agreeable range to place my stop loss count. And then once price taps in, it will give a really good reaction. This is essentially what happens in for the confluences, or rather, this is essentially the confluences that I look out for and the price actions that I deal with. Now, there are so many variations like this where price action can give us a lot of reactions in a point of interest, non-point of interest, around smart money traps, etc. A lot of ways we can go about this. Now, as far as point of interest goes, let's say price action is doing something like this, and there's a supply zone right over here. Okay, now this is a high quality setup because if I see Asia doing this build up of liquidity like this, okay, now Frankfurt also didn't do much reaction, but in London, price action aggressively swept high into the supply zone. Now this is a really good confirmation because price tapped into the supply zone while grabbing liquidity. Now all I need to see is a breaker structure. Once I see a breaker structure, this is golden. Now I'll place my stop loss right over here. 3 to 7 pips is my agreeable range, and this is a 1 is to 10 risk reward trade for me personally. So there are so many ways or variations that trades can take place, and I'm going to explain with a chart example right now of one of the trades that I took, but unfortunately I did break even early. I also have, there's also a break even protocol I will explain about. And yeah, because of that small mistake, I missed out on this 1 is to 10, and instead I hit break even. So yeah, I'll explain what the chart example is right now. Here is a chart example. I want to explain how I apply my strategy right over here, or rather my mentor strategy, that is. So yeah, let's see what the price action is about. And just keep in mind that all my executions are in the M1 time frame. All right. Now, if I choose M1 here, it'll the chart limit, it'll go out of limit. So I need to I don't have access to this. So I am on the M3. So here price action is overall bullish right over here, higher low, higher high, higher low, higher high. So we are seeing a bullish push. All right. Internally, it's bullish right now. And here, this was the last sweep of liquidity, pushed higher, breaker structure, new high. So this was a refined demand zone for me. So now here, Asia built up all this liquidity. All right. London induced Asia low. Okay, but there was no confirmations. to enter, looking for enters, right? So once this inducement was done, after London ended, or rather the first hour of London ended, price action induced upward. So we saw two inducements. This is known as an inflection zone, where we don't know if price will go upward or downward because we saw inducements low and inducements high, or rather even a sweep low or a sweep high. So that's why it's still uncertain. And unless either of those structures are broken, I will not look for entries. Simple as that. So that's one of the invalidations, inflection zone invalidation. So yeah, once price action finally broke past the structure, and once my New York key time window has opened up, price aggressively swept all the liquidity here. Okay, now here, this it was all smart money trap. Now this one swept London low. Smart money traders would have been enticed to enter here. They would have had their orders right over here and gave a really small reaction but didn't do much at all. And again, in the end, they got swept. So smart money trap here, smart money trap here as well. So there are a lot of smart money traps here too. So smart money traps was grabbed. Those are all liquidity, and London low was grabbed, and so did Asia low was grabbed too. So a lot of liquidity was grabbed right over here, and we saw a huge intention where price action aggressively came low to sweep all that liquidity into the point of interest. Now this is a really good high probability one. Now since I saw the inducement, I was looking for a really good reaction. Remember I said the cause and effect. The cause we saw, the effect, now the effect was also really good because we saw the breaker structure here, and engulfing was here, huge imbalances, breaker structure. So this was a really good high probability trade to enter. Now, although lower time frame confirmation happened just outside the key time window, I would always allow myself plus 15 minutes of time if I see a really good inducement or a really good probable trade, which is most likely to happen. And in this scenario, it did happen. So yeah, I allowed myself plus 15 minutes of time to look for low time frame confirmation, and exactly that's what happened here. I placed my entry here, although it's not accurately represented, it did cover the whole loss with 7 pip stop loss in MT5. So yeah, I placed my entry right over here, price action tapped in, and here is the key mistake I did. So break-in protocol, so there's a break-in protocol that I utilize, my mentor taught me that, but I accidentally did break even early in this case, especially because price was so sideways and it was really uncertain. Although it should have given this reaction it gave later initially, but yeah, regardless, price was just really uncertain here, and I just wanted to break even early. So, but that's why the mistake I did. In the end, I just price just tapped into my break even, and then although gave all this reaction here, ultimately broke past this structure. This is where my break even should have been. All right. Once this structure was broken, now my break even should have been moved here. This once this structure was broken. This is the M1 shift breaker structure. My break-in protocol essentially says do break even after an M1 shift breaker structure. So that is, this is the most relevant point to look for a breaker structure, because from here price retrace back, right? So once price moves past this one and does a breaker structure, then I will move my stop loss to break even area, that is here. But instead I just did that early, and unfortunately price tapped into my break even and proceeded to give the full reaction later on. Now here it is a 50 pip move with a 7 pip stop loss, 7 1 is to 7 risk reward trade, but ultimately it was a 1 is to 10, because on the next day right over here, Asia right over here, it gave a really good reaction on the next week, my bad, next week. So it gave a 1 is to 10 risk reward trade right over here for a 7 pip stop loss. So that was how this trade was played out, and it was a bit unfortunate that I missed it out. But regardless, a key lesson learned the hard way. It doesn't matter. So yeah, that's how this price action played out, and that's how I apply my strategies that I have to all the trades that I take. So yeah, this was a really high quality trade. So this trade, it was on the higher probability side, A plus setup kind of trade. So yeah, I hope you guys understood my what I was trying to explain the whole time, and I hope I didn't confuse you guys. And yeah, follow for more.